You have $74 in your checking account. It's a normal Tuesday. Coffee, $3. Lunch, $7. Gas, $20. And that phone bill you forgot about, $80. 4 transactions. One of them didn't fit, so 1 overdraft fee, right? For years, at some of America's biggest banks, no, 4 fees, $140. Not because of what you bought, because of the order your bank chose to process it in. That wasn't a glitch. That was the business model, and the story of how it was built, and how the one rule that would have ended it died before its first day, is the story of the most profitable courtesy in banking. Let's start with what an overdraft actually is. Your account hits zero, you swipe your card, and the bank covers the difference. The bank calls this a courtesy, which is technically true the way a hotel mint on your pillow is a courtesy. Except this mint costs $35, and for decades they could put it on your pillow several times a day. Here's the part they don't put in the brochure. An overdraft is a loan, a very small, very short loan. The average debit card overdraft? $26. Repaid in about 3 days. The standard fee? $35. Do the math on that as a loan, and according to the CFPB itself, you get an annual interest rate of over 16,000%. 16,000! A loan shark charging that would get reported by other loan sharks for unfair competition. So how is this legal? One word, 1969. When the Federal Reserve first wrote the rules for truth in lending, it exempted overdrafts. Back then, an overdraft was a banker occasionally covering a bounced check for a good customer, a rare favor. Then came debit cards, millions of small daily transactions, and banks realized the exemption written for a favor could power a machine. The favor became a product. The product became a profit center. Over the past 2 decades, Americans have paid roughly $280 billion in overdraft fees. That's not a typo. To use a scientific unit of measurement, that's about 8 billion very disappointing $35 sandwiches. But volume wasn't enough. This is where it gets creative. Remember your Tuesday? Coffee, lunch, gas, phone bill? Chronologically, only the last one overdrafts, 1 fee. But for years, many banks didn't process transactions chronologically. They reordered them, biggest first. That $80 phone bill jumps the line, drains your account instantly, and now the coffee overdrafts, and the lunch, and the gas. 1 fee becomes 4, same purchases, same money, triple the fees. Pew studied one real case at Wells Fargo. Reordering turned $22 in fees into $88. The bank quadrupled its revenue by shuffling a list, and when customers sued, and they did, over 30 banks worth of lawsuits, the banks had an explanation. Are you ready? They said they processed the biggest transactions first, for your benefit, because the big ones are the important ones. Your mortgage, your rent. They weren't gouging you, they were helping you. Thanks, Mom. A federal judge looked at Wells Fargo's version of helping and wrote, this is a direct quote from the ruling, gouging and profiteering were Wells Fargo's true motivation. The judgment? $203 million, which sounds enormous, until you convert it into bank units. At the industry's peak overdraft revenue, that's roughly 6 days of fees. Now, who is actually paying for all this? Here's the number that explains the entire machine. A federal report found that about 8% of customers paid nearly 74% of all overdraft fees. Read that again. The system wasn't making money from everyone's occasional mistake. It was making money from the same small group, the people with the lowest balances, living closest to zero, getting hit again and again. The people who could least afford a $35 fee were the ones funding the machine. And here's the detail that makes it worse. According to Consumer Reports, 68% of consumers would have preferred their card simply be declined. Free. No fee, no embarrassment spiral, just a declined coffee. Most people never wanted the courtesy they were paying for, which raises a question. If most customers don't want it, and it charges 16,000% interest, who exactly is being protected? But here's the thing. And if you've watched this channel before, you know there's always a moment where the system appears to fix itself. This story has one too. And for a while, it looked real. 2010, regulators require opt-in. Banks can't auto-enroll you anymore. Courts rule the reordering deceptive. Banks pay over $1 billion in settlements, and most stop doing it. Then the CFPB starts swinging. Wells Fargo ordered to refund $205 million. Navy Federal $95 million. Regions Bank, $191 million. And Regions is my favorite, because the CFPB found their own staff had warned leadership the fees were illegal, and management kept charging them anyway until a replacement revenue stream was ready. That's not an oversight. That's a scheduled conscience. Under all this pressure, something remarkable happened. Fees actually fell. Industry revenue dropped by nearly half. Some banks eliminated overdraft fees entirely. Capital One walked away from about $150 million a year in fee revenue. Voluntarily. Citi followed, Ally too. Turns out banks can survive without the 35 mint. Who knew? And then, December 2024, the big one. The CFPB finalizes a rule 50 years in the making. At large banks, the overdraft fee gets capped at $5. Projected savings, $5 billion a year. About $225 per household that pays these fees. Effective date? October 1st, 2025. It's finalized. It's signed. It's on the calendar. For the first time since 1969, the machine has an off switch, and someone's hand is on it. You know what happens next, don't you? March 2025. The Senate votes to kill the rule. 52 to 48. Every Democrat votes to keep it. Every Republican votes to kill it, except one. April. The House follows. May 9, 2025. The resolution is signed into law. The rule dies 145 days before its first day of work. It never capped a single fee, not one. And here's the detail most coverage missed, the part that matters more than the repeal itself. The rule wasn't killed with a regular vote. It was killed using something called the Congressional Review Act. And a CRA repeal comes with a special feature. The agency is permanently banned from issuing any substantially similar rule in the future, without a new act of Congress, ever. The $5 cap isn't just dead. It's buried under a headstone that says, "Do not resurrect." Signed Congress. So what happened after? Exactly what you'd expect. BMO, which had cut its fee to $15 while regulation loomed, raised it back to $20 once regulation died. The CFPB, under new leadership, started closing the old enforcement cases early. Regions consent order terminated. Navy federals rescinded. And in 2025, banks collected over $12 billion in overdraft and NSF fees. That's roughly $380 every second. Since this video started, the industry has collected about $150,000 in overdraft fees. By the end of it, call it $200,000. Notice the pattern. Follow the incentive. Fees dropped when the rule was coming, fees rose when the rule died. The only force that ever made fees fall, the only one, was fear of regulation. And now the fear itself has been outlawed, in writing, by law. The machine didn't just win this round, it won all future rounds, in advance. So what does this actually mean for you? 1. Opt out of overdraft coverage on debit purchases. This is the single move. A declined transaction costs you $0. A protected one costs $35. You are not protecting yourself. You're protecting their revenue. Decline the mint. 2. The $35 fee is a choice, so choose a bank that made a different one. Capital One, Citi, Ally. 0 overdraft fees, still profitable, still standing. Meanwhile, Wells Fargo and Chase each still collect around $1 billion a year in these fees. Switching banks takes an afternoon. It's also the only vote in this story that can't be repealed. 3. Set a low balance alert. 30 seconds in your banking app. The entire machine runs on one assumption, that you don't know your exact balance at the exact moment it matters. Break that assumption, and you're invisible to it. The fix existed. It was finalized. It was signed. It had a start date. It just never got its first day. And the people who killed it made sure no one can ever build it again. The system worked, just not for you. Works as intended.